Today is Monday, June 10th. I'm Rhonda Porter, and I'm here with this week's weekly mortgage market update. And this week we will see the wrap-up of the Fed meeting. And will the Fed reduce the funds rate? I got a spoiler alert for you. I don't think we're going to see that happen. Last Friday, we had the jobs report released, and this is a report that really tends to impact the direction of mortgage rates, and it's really become a bit controversial. And this is a great example of that, where you could see that it came in a lot hotter than expected with adding 272,000 jobs. And but yet, with all these jobs being added, the unemployment rate went up. So markets weren't really happy about that. Not about the unemployment rate so much, but just that it looked like our economy is a bit hotter than expected. We'll see if this influences the Fed when they wrap up their funds meeting on Wednesday. Optimal Blue reports that as of Friday, June 7th, that mortgage rates for 30-year fixed were averaging just under 7% at 6.946%. And you can see that we've been in this really tight range now for a while of rates just over 7 or just under 7% for the 30-year. Do keep in mind that this is an average. So it's based off of loans that were locked utilizing Optimal Blue, and they work with about 35% of the market. And we don't know if these, how many points were paid for these rates, or what credit scores this is based off, or what the loan to value is. And all these things can impact rates. So if you'd like to have a mortgage rate quote based on your personal scenario, please reach out to me. I'm happy to do that for you. This week, we have a lot of inflationary data to be released, including the Consumer Price Index on Wednesday, also known as the CPI, and the Producer Price Index on Thursday, also known as the PPI. A couple of auctions that are important as well. And on Wednesday, too, of course, we're going to have the wrap-up of the two-day Fed meeting, and we'll get to learn officially what their rate decision is going to be, and hopefully get some insight on what their future plans are as to when rates may be reduced with the Fed funds rate. So it is highly unlikely that there's going to be any changes to the Fed funds rate on this Wednesday. And the CMA FedWatch tool has odds that we're probably not going to see any changes to the Fed funds rate until possibly the September 17th meeting. So it may be a while. And this is kind of like in line with what is being anticipated for when we'll see reductions to the Fed funds rate. So as I'm preparing this week's report, markets have already closed, and you can see just how hot the jobs report was on Friday. I've got a blue arrow on this chart, and that jobs report that came in hot created a red hot candlestick there. And that means that rates most likely went up with lenders on Friday. And you can see that we closed about down 10 basis points today as well. So we'll see what the rest of this week brings. So last week, I had a great opportunity to attend a webinar with Freddie Mac and New American Funding. And it was all about accessory dwelling units and how a lot of their underwriting programs and mortgage programs are becoming more flexible to help create the building of ADUs. And they are a great resource, in my opinion, to help housing and fill in the gaps, to help like the elderly or maybe adult children that are unable to find housing. It could also be a great way to provide a rental for someone who needs a home, or rental income for a person, as well as maybe you just need extra space for your home. So there is a lot of different financing options available. If you're interested, please reach out and let me know. So if you're considering buying, selling, refinancing, maybe you want to remodel or do a debt restructure, please reach out to me. I'm happy to help you, and I would love to hear from you. I hope you have a great day. Hope to talk to you soon. Take care. Bye-bye.